All right, I think we're live. Hey, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Let's see if I can fix the lighting a little bit here. All right. Hey, welcome back. I know I've been gone for a little while. I think I've been gone almost a week. I think I've been gone about 5 days. Took a little bit of a break. I know everyone was starting to get a little concerned, was getting a lot of messages. Thank you so much for caring. And we are back. So let's go take a look at the markets. I'm gonna, well, it's been 5 days. I'm gonna do my best to keep it on the shorter side, but we will see. I know I put in a slow mode on chat. Wanted to, take it easy a little bit. Hope everything is working fine. I'm gonna pause this and not to chew up the bandwidth. And here we go. Going straight to screen share. And all right, I want to mention this later on, just to kick it off. I have decided on the days. I want to redo the on-demand videos for the workshops. There's going to be lots of changes coming. This is just the first wave of all the changes I'm going to be doing. And these are going to become the on-demand videos. They are set to only 0.05. So less than $500, and this is only technical analysis, and this is only entries, exits, stop losses, risk management, trade execution, zero technical analysis being taught. There are descriptions. There's a general description here, and there are descriptions if you click on these things, an additional description for the course itself. That should be working. I was playing around with the back end today. How about this one? No, I don't know why. I don't know why that happened. But it should work on your side. There we go. Other than that, we're going to jump right into the charts. So this is all I will mention. There it is. There it goes. Okay. So there's a description here, and then you can just click on that if you're interested. If you're not, no big deal. All right, let's go to the charts. We're going to go to Bitcoin. We're going to end with the S&P 500. The S&P 500 is definitely moving. People have been asking me, am I still short the S&P 500? This will probably be the last trade I'll ever talk about publicly. I think I'm done with that part. I'll still be occasionally putting in trades. It's just nobody's business what my actual trades are, and it doesn't help any situations. So let's go to Bitcoin. Look, nothing has changed. We have the news that PayPal, or the news of the rumor that PayPal is going to let you buy and sell Bitcoin, something they probably should have done 10 years ago when Coinbase started doing it because they missed out on an extra $1 billion of valuation. So that was dumb of PayPal not to, offer people a product that they would really, really like. So if they start doing it now, great. Coinbase is way ahead of you. This is no different than Coinbase. Everything I ever said about Coinbase would apply to PayPal as well, probably even more so. So nothing really changes. If people, it will be easier for people to buy Bitcoin. It'll also be easier for people to sell Bitcoin, but the buying is the more important part. Okay, so how is this different? Well, it's really not. Unsupported resolution. I wonder what's up with that. Oh, I'll have to look at that later. So this is the hyperwave look on Bitcoin, and we are still being rejected by this trend line. We have been rejected by this trend line for 1, 2, 3, 4, 5, 6, 7th week. And based on the way the Bitcoin price is heading right now, I wouldn't be surprised if this trend line is still resistance for an 8th week in a row coming up next week. Here's the monthly chart. Haven't taken a look at it in a little while. The monthly chart is actually still kind of bullish. Now, today's prices are not factored in. We are definitely a little bit lower, but this is still looking bullish. And is my indicator now working across all charts now? On my end? Hope it's working on your end. Okay, it's working here. So let's go to the standard weekly chart. The standard weekly chart, once again, was breaking above the trend line and has been rejected. We are rejected by the trend line one more time. We are also now below, I believe, the 50 period. No, what period is that? It's been so long since I looked at charts. I don't remember what my moving averages are. 7 period. It is below the 7 period weekly moving average. So the 7 period isn't that critical, but this next one is a lot more critical. And let's see if it holds it. That's over an 8,600. But we are price flipping back and forth. We are in complete consolidation. This sell indication 3 weeks ago is continuing to hold. It happened at rejection of the trend line, and everything is still, everything I said over the last 3 weeks has not changed. Like, I could have been gone from talking about Bitcoin for over 3 weeks and nothing would have changed. We are dealing in the middle of a 1 to 4 candle correction, and next candle is going to be that 4th candle. So as of Sunday night, we're going to have another candle. So if that candle starts trading lower than the current candle, the price of Bitcoin could be in trouble on a weekly basis. Individual news in Bitcoin matters a little bit, but the overall correlation to the stock market is clearly is the bigger issue here. So whichever way the stock market begins to move, Bitcoin is sure to follow in direction. I don't believe Bitcoin will go to new lows, even though the stock market could, but I also don't believe the stock market is going to go to new lows. I think both the stock market and Bitcoin will just make a secondary low. For Bitcoin, the most optimal place for Bitcoin to make this secondary low would be around the $7,000 area or slightly below, like the $6,800 area. That would be the absolute perfect place as far as the time element. The later in August it does it, the smoother everything will go, because by then it will have double support of the 200-week moving average as well. So we will continue to wait for that potential possibility. Okay, so the weekly chart is neutral with a bearish lean. The bearish lean comes from the fact that we are still not able to break the trend line, and the fact that we are still coming off a momentum top a few weeks ago. Daily chart. I need to bring annotations. Okay. So the daily chart is still within the triangle. I've been gone about 5 days, and not much has changed. I have not touched this triangle. So now we can go ahead and update it. But today's candle, you know, the story on today's candle has not yet been written. So you can be updating this triangle all day. Since I'm on the video now, I will go ahead and adjust the triangle so that we are not breaking any of the bodies. So there you go. We are still touching here, here, over here, 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 and now again there. That is an unreasonable amount of touches on this trend line moving up. We also have plenty of touches along the top, the one that kicks us off, plus a second, probably a third, or maybe 2.5. That's a slight overshoot for half a day. I'm going to let this slide. And here's one more touch. And I would have been nice to get a touch here a couple of days ago if we would have gone up to 10,000. I did not lose any more days as part of my bet. We are now almost 6 months into the bet that I have that Bitcoin will not close above 10,000 90 times this year. And so far, we have closed 7 times above 10,000. And if it happens 90 times, I will owe someone a very expensive dinner. So we continue to watch the triangle. But if the next candle is a breakdown candle similar to today's candle, that comes out very, very badly, because first of all, it breaks the triangle. Second, it confirms the breakdown of the 50 period moving average, which is bad. It's also going to be a red 2 below red 1, which is also bad. So everything becomes bad in this daily chart if we don't get a swift rebound tomorrow. This triangle is going to come to an end with a big drop tomorrow that closes, you know, around the $9,000 area if that is to occur. Let's see if the 4-hour chart is interesting. At the moment, the 4-hour chart is looking kind of rough. I want to look at the BitMEX funding rate. I forgot about that part. So if I'm looking at the BitMEX funding rate, it is actually favoring the bears. Surprisingly, more people are bullish right now than bearish. And considering that the price is breaking down, that suits very, very well for the bears. It's very rare that the chart is starting to flip bearish while people are still over bullish on BitMEX. It's usually been the other way around. If we look at the other daily oscillators, we have the RSI, which is dangerously close to a very bad breakdown. And we have the MACD, which is still in its downtrend without ever crossing over a couple of days ago. Once this crosses the zero line, that actually increases the probability of bad things happening to Bitcoin. You can see it right here, what happened to Bitcoin when we crossed the zero line. You can also see it in the opposite direction, what happened to Bitcoin when it crossed the zero line going into the top. Most people don't pay attention to the MACD crossing the zero line, but I do. That's actually one of the things I also keep an eye on. Give me 1 second, guys. Okay, everyone always pays attention to the MACD cross. Few people watch the MACD as it crosses its equilibrium line. Whenever the MACD crosses the equilibrium line, there's usually really good momentum in that move. Basically, as I continue to scroll back, it's very, very rare that the MACD crosses the zero line without giving you a decent chunk of good momentum into a trade. Now, of course, the MACD is late to the party, so we're bottoming a little bit earlier. But once the MACD gets close to the zero line, it's also very likely that it will keep going down. It's very rare that the MACD crosses the zero line and immediately reverses back over to the other side. It tends to keep going for quite a while. So if the MACD crosses past the zero line on a daily scale, I would kind of expect it to dip quite a bit. Which could continue to signal a potential Bitcoin move down to the $7,000 area. I think the $7,000 area is an amazing buy the dip situation, and I will try to stay ready, of course. On the 4-hour chart, the momentum is not looking good. As you can see, we are at the bottom of this trend. We were consolidating here, ignoring this huge spike followed by the big drop. And now we're consolidating lower than that, and we are pushing the bounds of this lower area. The MACD, the oscillators aren't very useful right here on a 4-hour chart for me. We have clearly broken below this channel. I cannot fudge this channel anymore. And, this consolidation is looking troublesome if we break these lows. These lows are at the $9,000 area. The break of the $9,000 area can certainly drop Bitcoin quite a bit towards that $7,000 area. All right, just a quick peek at the other charts I have. Obviously, the GBTC will be going down if Bitcoin's going down. I have the BitMEX funding rate as 14% at the moment, which is not that bad. I prefer to buy GBTC in that 10% range, but 14 is not that bad. The good news is that the hash rate is holding strong while Bitcoin has been consolidating and potentially dropping. We will see what the hash rate does if Bitcoin does indeed go towards 7. The Bitcoin dominance is not really rising at the moment. It is still stuck. I am still on record that Bitcoin dominance will be pushing 80% into year end. I have 6 more months to see how that prediction pans out. This is gold. I was very optimistic about gold this morning. This morning, gold has reached a new, almost a 10-year high in gold. So as you guys know, I am a huge fan of buying strength and selling weakness. I am a bull of any asset as it breaks out to new all-time highs. Now, gold is not breaking out to new all-time highs, but a 10-year high is good enough for me. So throughout this entire consolidation of gold, I have remained very bullish on gold. I remain long in my gold position. It is an options play that doesn't expire until September. Of course, as a responsible options trader, I will not hold that position past July. So I believe gold will be breaking out before end of next month. And if not, I am willing to, roll those options over because I want plenty of time because gold is moving like a snail. I really like how the moving averages are now, all above each other, trending higher. Like I said, we did make a brand new swing high this morning. I would love to see a new swing high close. We saw a new daily swing high close yesterday. So yesterday, a gold closed at its new high, 1782. And right here, it closed at 1769. And that's a brand new high. That's like an 11-year high. The last time gold was this high was like 2012 or something, or 8-year high, whatever it is. It's good enough for me. The daily chart clearly has momentum. We are only on a 4. If I go over to the weekly chart, the week is looking great. It is a new high close for the week, assuming the week ended today. It is a new swing high, obviously, for the week, assuming the week, well, it doesn't matter. The swing high is the swing high. The moving averages are incredible. Everything is bullish. We are above all Fibonacci lines. And I am still waiting for that target. The target off the daily head and shoulders is pointing literally into the old all-time high, or just under that. So here we are. I do think gold can swing to new all-time highs. And if the stock market continues to go down, I believe that investors and speculators will look for something to that's rising. And I believe that something is going to be gold up to a point, of course. But right now, I am bullish. I am not in a rush to sell my gold coins. But if it goes up high enough, I certainly will. And I'm happy to convert those into Bitcoin because gold seems to be doing okay. But I think Bitcoin is more speculative and it can drop and it can decouple from gold a little bit. I can see gold rising over the summer and I can see Bitcoin dropping over the summer. But then they're going to flip. I also believe going into the end of the year or going into next year, I believe they will flip. So if I see gold having this crazy rally past $2,000 a coin, I will be pretty interested in rolling my gold and maybe silver into Bitcoin because I still have a bunch of gold and silver because I bought it before I got into Bitcoin. Actually, I was still buying gold and silver while I was already in Bitcoin in like 2013 and 14, and I regret those purchases very much. Okay, let's move on. Oil. Oil is also following the S&P 500. The S&P 500 has been consolidating, and so has oil. Oil is a reflection of the economy-ish, like the stock market is the reflection of the economy-ish. And if the stock market is rising, industry is doing better, they will need more oil. If the stock market is crashing, businesses are going out of business, no one is shopping, no one needs oil. So if the stock market severely pulls back, oil probably will as well. Right now, oil is still looking bullish, a little more bullish than the S&P 500 is looking. Hey, thank you guys for your questions. I do have some friends that are keeping track of those for me, and they are shooting those over to me if they're good. Okay, what is this? This is also oil. So what is this? Sorry, this is silver. My bad. This is oil. The charts look similar. No wonder. This is silver. It looks very similar to the oil chart. It's consolidating as well. So everything I said about oil, look at it through this chart. And silver is like gold, but silver has kind of decoupled from gold a little bit. They're acting a little bit weird. Silver went up a lot more. Now I think gold can rally and catch up. Now we get to the S&P 500. So the S&P 500 dropped big time early this morning. It has been rallying since about 11:30 in the morning. So I am, of course, short the S&P 500, like I've been saying for weeks. I don't want to get too deep into my position because, it's at this point, I feel like it's nobody's business what my trading actually is. This was very frustrating resistance. Like consolidated, very frustrating. This is like a miracle that I did not like. Look, 90% of the time in this situation, I am incredibly bullish. Consolidation right here. Look, 1, 2, 3, even tops. I always say there's no double tops. Anytime you get a double top, you break out. Like this 1, 2, 3 on a short scale, to me is kind of like this 1, 2, 3. I know these two are dead even, and this one is a little bit lower, but this is what I expect. And then I expect a monster breakout to the upside. This is no different on a shorter time scale, but the fundamentals, it was the fundamentals. I am 90% TA and I am 10% fundamentals. And I had to go with the fundamentals, and I continued with my short trade. My short trade was initially entered up here. I was supposed to take my profit right here, right at the low. And the reason I'm saying I was supposed to take my profit right here at the low is because after I took on that trade, I tweeted out my plan, and the place where I said I was going to take my profit was going to be 29.50. Unfortunately, I kind of missed it. This happened very, really quickly, very early in the morning, and it didn't quite get to 29.50. So I literally missed my initial exit to cut the risk of my position. And it kind of, surprised me with how much it rallied. And over the last few days that I was not doing any streams and stuff, and yesterday was also pretty frustrating as well. Overnight, the China deal apparently broke off and the market was crashing. And then an hour later, the China deal apparently did not go down, and the market, shot up. And people were in my groups because I was somewhat borderline reachable while I was on my break. And people were asking me, am I still short? Am I still short? Because this was literally my stop loss going into yesterday. And here's what I wrote yesterday. I took a screenshot. Someone asked me in a group, am I still short? This was yesterday at around 4 p.m. Am I still short, or did I get my stop loss hit? Because it was a legitimate question, because it's 50-50. This is exactly where my stop loss is supposed to be. And the reason I want to read my reply is that it also talks about the general market. And what I write is, I doubled down yesterday. So by yesterday, meaning I doubled down. So I wrote this yesterday. So that means that when I say I doubled down yesterday, it means I doubled down here. So I didn't double down up there. I actually doubled down over here because, and I should not have doubled down, but I was kind of frustrated. So I just did it and not care. And I explained that, well, I was kind of happy because I doubled down, and then overnight, the China news is crashing the market. And then the next day I was, it didn't happen. And then I move on to explain there was no reason for me to double down. I'm over leveraged and way beyond standard risk metrics that I teach. I would never do this with other people's money. And this is not like a hidden read between the lines, Tone manages other people's money. I don't. Just saying, I would never do something what I just did with my portfolio with other people's money. I am, or even recommended for other people to do it, which is why I kind of, stated it kind of late. Though I had no idea the market was going to crash today. This happened yesterday right after the market closed, when it was still pretty bullish. I'm just doing it with my money. I'm technically still under my stop loss of last week's high based on option expiration. I cannot hold it beyond Monday. These options do not have that much time, and I can only hold this trade until Monday. And even holding it till Monday is borderline dangerous, adding on top of my current leverage and on top of the unreasonable size of my short position. And I'm saying probably not even that long. I am basically gambling on a crash to 2,900. This is what I wrote yesterday at 4:16 p.m. If tomorrow, and this is the important part, if tomorrow we break today's high, it will be a green 2 over a green 1, suggesting higher prices and a challenge of all-time highs. Now, let's go and specifically talk about that. Yesterday, as you can see, we're on a green 1. And I wrote this yesterday, even though my double down came here on the red 1. And yesterday, I write the following, that if today's candle is going to be trading above yesterday's high, that absolutely breaks my resistance. That absolutely hits my stop loss. That will give me a green 2 above a green 1 above resistance and cutting into this gap. So I was ready to give up on everything today if we were to have this day in reverse. If today was a big up day, my trade is over. My short trade is over. And what was a very great and incredibly lucrative and profitable short trade over the first 4 days would have been a loss. Between option expiration and me doubling down over here, this would have been a losing trade, considering I timed the top literally to the day, because I used the futures market I didn't trade in the futures market, but I utilized the futures market to time the short trade over here, because you're about to see a red arrow or an orange arrow once the indicator loads right there. So this was the day I shorted on. Unfortunately, the numbers did not line up between the cash market and the futures market, but I shorted here. But if today was going to be the opposite, this trade would have been a losing trade between time decay and an unfortunate double down 2 days ago. So let's get back to the message, because the message goes into other things as well. And lots of things would happen here. So first of all, not only would the daily give me a green 2 above a green 1, indicating a new bullish trend, the weekly chart trading today above this line and closing this week above this line tells me that there's potential for up to 3 more weeks of upside, literally challenging the all-time highs. So everything changes. If this week we go and close above the highs of this week and last week because they're even, so then we challenge this high. And if we challenge the 2340 high, I just don't see how the market would not go to new all-time highs and then probably double over the next years. Like, this is really it. This is really it. Like, if the stock market isn't crashing from here, I just don't see how it would. Basically, it's I can see this being a capitulation, because a lot of the insiders, a lot of all the politicians, not all the politicians, but a lot of the insiders, those with who know, they got out. They got out right here. So if we go back to new highs, I think all of the big boys that got out are going to go back in. I mean, it's literally everyone will just say the Fed will fix it all. And this is why I don't think it's going to happen, because I don't think the Fed will fix it all. Let's get back to the message. So if we maintain the weekly count, okay. Next, Trump has a big problem if stocks are at all-time highs at election time. So before COVID, so going into this year, Trump's #1 re-election metric was, and what was going to be, and was the stock market. Trump was gonna play the stock market card. He was gonna play the unemployment card. My presidency has led to a new low in unemployment. My presidency has the stock market at an all-time high. This favors everyone. Everyone has jobs. The economy is doing amazing. Now Trump has a problem. Unemployment is like at an all-time low. And if unemployment is at an all-time low, but the stock market is at an all-time high, you can't exactly stand there on TV and talk about how great the economy is. In fact, the pitchforks of the rich getting richer and the poor getting poorer are literally going to come out at Trump's rallies. And that's what I wrote here. Trump has a big problem if stocks are an all-time high at elections. Normally, this is the best thing for an election. The problem is that unlike all other market all-time highs that have come with low unemployment, this one is coming in with high unemployment. At all-time highs, with all-time high unemployment, will bring out the pitchforks of rich getting richer while the poor getting poorer. A market drop, but not a crash, with stocks sitting closer to 2,300 to 2,500 at election time is Trump's sweet spot to win the election. So I'm not saying there's a conspiracy to put the market at price X in order for Trump to get reelected. This is not where I'm headed. What I'm saying is Trump's best chances to win the election is if the market pulls back into 2,600 going into October, and then in October reverses and is rising towards 2,700 or so going into the election, because then it looks like at least the economy is somewhat in line with the economics and people's frustrations. So Trump, the last thing Trump should want is a new all-time high in the stock market. And this is why I believe the Fed needs to put serious brakes on indicating to the investors that they are all about the stock market, because it's bad. It's bad for all politics. I think the Fed is gonna stop making dumb statements to push the stock market higher, because it will reflect very, very badly on not only the people of the Fed, but also the Trump administration. So I believe that is going to stop. So I have other reasons. So once I've mentioned that this rich getting richer, poor getting poorer, people in my chat group mentioned, showed these charts. And they're very, very interesting. So there's two of them. So this one came out first. And I know they're a little bit old. 2016 is a long time ago. But here is the top 1% and the top 0.5%. And yeah, we do see the top 1% not making as much money going into the decoupling from gold. And then in the 80s, it turned around. Now, lots of factors go in here. Obviously, do I think it would have been better on the gold standard? Sure. But you can't blame the rich for, I don't blame the rich for anything, actually, other than, government regulatory capture. But anyone rich has the free market right to get richer. There's nothing wrong with that. And it's not these people's fault that the gold standard went away. If you are wealthy, it's your job for your family and your kids to continue to stay prosperous. Because otherwise, if you just start giving away your money because your profitable business is making you good money, a competitor is going to come in and take all of your business, and then you go from top 1% to the bottom 20%. Okay, so it is to your well-being to continue to try and be more entrepreneurial and continue to make more money with more success. No one should be demonized for that. This is the chart I found really, really interesting. And you can see how the top 1% have done really, really well since 1980. But what my eyes fixated on was the fact that the bottom 20% have done better than the middle 60 and the next 19. That is incredible. So I don't want to hear shit about the poor getting poorer. Now, again, this statistic ends in 2016. We don't know how it is today from 1980. But the fact that the bottom 20% have done better than 89%, that's legit. That's really, really good news. Okay. So it's a huge misconception that the rich are getting richer. Okay. Because if you're in the top 19%, you're not doing too bad. Okay. Now let's talk about the top 1%. huge misconceptions here, big time. So first of all, yes, the top 1% make a lot of money because they have more money in the stock market and stock market rises. They also suffer big time during the crashes. Obviously, they are on a higher trajectory. What frustrates me when it comes to these discussions is that the top 1% is a small number of people compared, obviously, it's just 1% of the people. And this 1% of the people is not the same people that were there in 1980. So the question is, in 1980, where was Elon Musk and where was Jeff Bezos? And where was Mark Zuckerberg? You know what? They were nowhere on this chart. They were probably in the bottom 20% because they were kids. So it depends. How rich were Zuckerberg's parents? How rich were Bezos's parents? I don't know. I have not done the research. So he could have been in bottom 20. He could have been in middle 60. So people like Bezos have moved up into here. And by moving up into there, they knocked someone from here down there. So I bet you if you took a snapshot of family wealth in 1980 and who was in the top 1%, and you look at where that family wealth is today, I guarantee you this thing will not look this steep, not even close, okay? It's very possible that the next 19 have done better than the top 1% if you took a snapshot of the families and the people that were in that 19. Because in the US, it's still a somewhat capitalist society where your intellectual property, where your innovation, where your hard work is rewarded. Because you know what? When me and my family came to this country, and I was about 10 years old or thereabouts, and we were on welfare and dead broke, okay? So I was not just in the bottom 20%, I was in the bottom 5%, maybe lower than that. My family was in the bottom 2% in the 1990s, okay? And that was in the 90s, okay? And I don't know where I rank on this chart now, but I'm pretty sure I am, at least in the middle 60, okay? And that's coming from like the bottom 2%. So I still believe that in the US, you are still better off than 95% of the world because you still have an opportunity to move up, and it's up to you. And once you move up and you continue to excel forward, that's where this becomes 226%. But it's not the same people. So it's just a horrible statistic by socialists to basically demonize those that innovate and move up the financial and status ladder. Bezos was 16 years old in 1980. Right. But even at 16 years old, Bezos could have been a millionaire if his parents were millionaires. So like I said, I don't know his family history. Okay. I can tell you what my family's wealth was when I was 16 years old, and it was like almost zero. Okay. Which is why I've been working in the US since I was 13, 3 of those years illegally. And then the moment I got to college, the first thing I did was find a job. And all throughout my 5 years of undergrad, because I had 2 degrees, I held 2 jobs at all times. I had 3 jobs while spending 5 years in my university, and it was 3 jobs. So I found a job. Soon after that, I found another job because there were rules against how many hours you can work. So I had 2 jobs, and then I left 1 job for another job. And they were all, like on campus related. And I picked up other people's shifts. Again, breaking school laws. You're only allowed to work 20 hours a week. I needed more hours. I needed the money. I worked shifts for other people. They put their name in the book that they worked the shifts, and then they just passed on their income to me. All right. So now we can take a look at some of your Q&A. We do have 900 people. Hey, I just want to pull this up one more time. I put up 2 webinars on sale this morning, Intro to Trading with Technical Analysis and Risk Leverage Money Position Management. Honestly, they really need to be taken together. Taking one or the other is not enough. You almost have to take them both. They are 0.05 each, which is under $500 each. And there is a general description of all my workshops here. And if you're going to register on this form, you got to choose which of the workshops you're registering for, or click on registration, it will self-populate. There are also descriptions. So if you click on details, it'll take you to another page. This explains what's in that workshop. So this workshop here has no TA. I am not teaching any TA here. Okay, not the indicator, not what a candlestick is, nothing. This is all about entering, exiting, leverage, money management. So we can even honestly, the best way to teach this is to start flipping coins and deciding when to buy, what to sell, what stock to buy and what to sell, and teach money management to make sure no one blows up their account and gets wrecked. This is what this is about. The other one, before I get the Q&A, is I know I've taught technical analysis before, but I'm making all new slides. This is going to be 6 hours of technical analysis. It's going to be more detailed. It's going to be more things. I'm going to alter this description once I'm done with the slides. I have like 3 weeks to make slides. It's going to be completely redone. There's not going to be anything about the indicator. There's not going to be anything about sequential. This is just introduction. I don't want to say it's basic TA. It's going to be pretty advanced. And I mean, if you know TA, then you don't really need this at all. But it's there for you. And if I go to the on-demand videos, this is what's going to replace them. So that technical analysis is going to replace this video. It's going to be longer and more in depth. And the other one is going to replace both of these. So right now, these two, I'm selling them for, again, under 500 each. But both of these will be combined into one. It'll be one longer video, same thing. Price is not going to rise. It'll be under 500, both of them together. I'm going to be taking these down. Actually, like if you're thinking about buying these, I mean, and you're trading now, you may want to, but otherwise you may want to wait if you're thinking about it and just take the new one because it's going to be just so much better. And there's other big changes coming as well. So I just wanted to make those announcements. All right. Also drop the price of the options trading to 2. And we'll see how long I'll keep it there. It'll probably go back up to what it should be, 25 or 3. Okay. On that note, let's go to your Q&A. I'm going to open up the stock market. Yes, I am still short the stock market. Really wanted, that's the weekly chart. Obviously, since I'm short the stock market, I want the stock market to keep dropping. My stop loss is absolutely going to be moved down at this point because option expiration is coming. My stop loss is now going down to the top of today's candle. I'm not going to move it. This is it. And again, I'm hoping this closes at the lows and we get one more down day tomorrow and maybe Friday. I don't want to hold my short over the weekend. I would love to exit my short this week. And the closer we get to 2,900 for me to exit that short, the happier I will personally be to get out of this trade. Because to be honest with you, it's been a very, very frustrating trade. Keeping an eye on this, we are bouncing back on the stock market here. And we will see. Let's see if this momentum is ending anytime soon once the indicator loads. Almost. We got 20 more minutes and then high probability of turning. You can see we also turned one candle a little bit early, but you knew it was coming. And let's see what happens. We got maybe 10, 15 minutes. It might have already turned. All I can tell you is my logic hasn't changed. The break of prior swing lows accelerate the drop. The break of this low, I mean, the break of this low is going to be hard to accelerate the drop, but it's possible. there's two reasons why it's going to be hard to accelerate the drop. One is the fact that we're already pretty damn low for the day. And two, the market is going to be near the end of the day. But if we are breaking this early tomorrow without breaking it before tomorrow, this will certainly accelerate the drop down, in my opinion. Okay, Tone, look at the NASDAQ. Sure. Here's the NASDAQ. And I'm not sure exactly what I'm looking for here. I don't see anything special with the NASDAQ. It didn't top with indicators. It did top on a reversal candle, but that's all I got. Obviously at a new all-time high. Remember, I am bullish at all-time high break. So I am bullish NASDAQ here as of June 4. Obviously, I was bearish here, and I am bullish again at all-time high, but at the same time, I'm short the S&P. I can look at the weekly, see if there's anything interesting there. Again, reversal candle on the weekly, but look at the counts. This is where I was anticipating a drop in NASDAQ, and it looked perfect. But then last week and early this week, it was just, again, I've been dumbfounded by the strength in this market. I continue to trust my gut on this one a little bit. I usually don't trust my gut. I usually go with TA. 90% of the time I go with TA. This was that 10% exception where it just made no sense for the market to keep rising. So I had to just stay with my short. Oh, by the way, this weekend, I am heading off to Pork Fest. It's been enough time in isolation. So Pork Fest, maybe I shouldn't announce this publicly. Forgot the O there. It's not unofficial. There's nothing official going on as far as I know. It's a campground. No way is this picture going to ever happen this year or maybe even next year. But I will be at the campground, Pork Fest, probably speak on a panel. This is in New Hampshire, middle of nowhere. And obviously it's going to be small because no one can fly in from outside the country. This thing is closer to Canada than it is to civilization, like a New York City or a Philadelphia or Boston. So, all right, not sure why I can't scroll, but anyway. So I will be out there in case anyone's wondering. And there I am. Very few people, nice and small. It'll be good to chill by the fire, have a drink. Looking forward to saying hi to people in person. Okay. Next. Yeah, shout out to Bitcoin Motorist for this one as well. He's the one that talked me into it. All right, more questions. All right, let's go to the top for questions. Hey, Tone, 1 billion Bitcoin options to expire on June 26th. Your thoughts, how will it affect the price? Well, I teach this as part of my options webinar. There is this concept of called max pain, maximum pain. That is a price where the maximum number of options expire worthless, hurting the most number of option speculators. For Bitcoin, as far as I understand, the June expiration of options has a maximum pain of 9,300. And guess where the price is? 9,300. So at 9,300, the maximum amount of option traders will lose the maximum amount of money. And as you guys know, rule number one of trading, you will lose the maximum amount of money. It's gambling. So I am not surprised at all if the price of Bitcoin is exactly $9,300 going into option June expiration. And after that, anyone knows. Okay, same thing happens in the stock market, by the way, not a new concept. Because if you are a big time person with a lot of money, and this is not illegal, by the way. So if let's say I am, let's say I have Roger Ver money. Well, I don't know how much he's lost in his Bcash venture. So let's say I have Winklevoss. No, I like those guys too. Who do we not like that has a lot of Bitcoin? Anyway, it doesn't matter. Let's say I have, let's say I'm a billionaire. Well, again, bad example. All bad examples. Let's say you have a guy who's a billionaire in Bitcoin, and he is making a lot of money by selling you options. He's selling you puts. He's selling you calls. He wants them to expire worthless. So if he sees the price of Bitcoin at $10,000 and says, hey, I got to pay out all of these people that bought call options, but I have the money. If I crash the price of Bitcoin from 10,000 to 9,300 because I have extra money, I will make more money by having all these options expire worthless because I sold them all this premium. And then I can push the price back up. There's nothing wrong with this. There's always a bigger fish that can come and eat them. So there you go. So there are interests out there to keep the price of Bitcoin at 9,300 going into option expiration. Next question. Tone, do you see a descending triangle on Bitcoin daily? I don't. I still see an ascending triangle, but I will double check. I can't see a descending triangle because I am still fudging with my ascending triangle. So I do not see a descending triangle on a Bitcoin daily yet. Not really. Nope, I still see an ascending triangle, but we'll see what happens soon. Do you ever look at MFI indicator on the daily Bitcoin? I'm not sure what MFI indicator is. I'm not familiar with it. So the answer is no. Thoughts on how returning to a gold standard would affect Bitcoin? You have previously mentioned this months ago, but I would not find your thoughts on this topic. Look, we're not going to a gold standard, at least not anytime soon. Gold standard is not coming. They're going to try like 5 other things before a gold standard. I mean, there's been funny pictures. So the social distancing is supposed to be 6 feet. And there's all these signs for social distancing, like keep the distance between 2 people to a cow. And there's like, you know, a sign or a road sign like with cows used for social distancing. Then there's some that has 2 sheep for social distancing. And the meme, I'm not sure. I'm actually staying away from Twitter. I know I sent out a tweet with the link to this, but I haven't really sent any tweets. I might take an extended Twitter break here. And the meme was Americans will use any measure, any unit of measurement except the metric system. So apply that to the world reserve currency. US is still the global driver of the world reserve currency. IMF is involved. China may say something. That's about it. And Germany will say something, but UK might say something. You know, they have some kind of vote or say in the matter. Not that that vote is all that big. No offense, guys. And they will use anything and everything before they go to a gold standard. So the probability of a gold standard this decade is almost 0. And because the probability of a gold standard this decade is almost 0, it's a useless discussion of what will happen to Bitcoin under a gold standard. Because Bitcoin 10 years from now is not going to be the Bitcoin today. It would have double its lifetime. So it's a bad discussion to have for another 5 years. And if the gold standard was actually in discussion with a high probability of happening in the next 2 to 3 years, I can make the argument that it helps Bitcoin. I can also make the argument that it hurts Bitcoin. I think it helps Bitcoin more than it hurts. I think there was a podcast of me and Saifedean just, driving in the car, live streaming. And I debated this with Saifedean because I think Saifedean said that a return to the gold standard hurts Bitcoin, and Tyler agreed with him, Tyler Jenks, and I disagreed. I think a return to the gold standard admits the government basically throws in the towel. They admit that the fiat system doesn't work and you need hard money. And what's better hard money than Bitcoin? So if there is a return back to the gold standard, it won't be long before the gold standard experts are going to push for Bitcoin because it's a better gold standard. So I think a gold standard absolutely helps Bitcoin. And I know I will, because we're not going to have a gold standard, guys. It's not coming back. It's either fiat or Bitcoin standard. That's it. There's not going to be a gold standard. It might be a transition period. The only reason to have a gold standard going forward is a transition period from fiat system to the Bitcoin standard system. And during that transition period, you appease the mind of economists that will tell you that the world's not going to end and their babies are not going to die under a gold standard. But then very, very soon, those economists that are going to be running the gold standard are going to be, they're already in the boomer department. I'm not using that term in a bad way. It just means based on the age they were born. And new economists that are Gen X are going to be completely taken over until the millennials take over, and they're going to be a lot more comfortable with Bitcoin. So if there is to be a gold standard, it would be like a 10-year plan for transition into the Bitcoin standard. Okay, questions? Please consider a show covering the Fair Tax Act. I'm not exactly sure what the Fair Tax Act is. I have to Google it. I don't want to Google it on live air. So I'll try and remember to Google it after. I got my own views on taxes and how they should be collected and what they should be collected for. It's its own multi-day podcast, to be honest with you. Tone, everyone is calling for the market to go down. Everyone is sure they have to. Does this create a more bullish case? Or is this situation beyond that logic? Not everyone. A lot of people got wrecked thinking that the market would already be going down. Even in my own groups, while I continued to explain that I'm short and I'm staying short and I'm doubling down on my short, even in the Tone Vays group, there were people going long. And so, look, there will always people on both sides. There are people that think the market has to go down. Then there are people that think that because people think the market has to go down, the market has to go up, so they're going to go up. But then there are people thinking that because there are people thinking that the market has to go down, and there is enough contrarians thinking that because the market has to go down, it now has to go up. So I have to be the contrarian of a contrarian of a contrarian, so the market has to go down. Well, like, this is how the market works. Well, like, people do not think the same thing. Like, it doesn't happen. You can't get everyone on the same side of a trade, okay? And just because people were taking the opposite side of my trade when I was short doesn't mean that they were wrong. Like, I could have gotten wrecked today, and this could have been in the opposite direction. In which case, well, I wouldn't have gotten wrecked, but I would have exited my trade very disappointingly. I was ready. That's it. Today was the day. Today was the day I was going to throw in the towel if we were going to have a green 2 above a green 1. So those that started to go long here at the bottom while I was still short, they were doing well. I hope they got out on their stop losses. I don't know. I want everyone to do well. Like, I want people to be profitable traders. This is the goal. And I don't want people following other people. I teach people to make their own decisions. My goal is to teach people how to manage their own money. All right, guys, the podcast is an hour. Definitely trying to keep these to an hour. As you can see, we're reversed. Really thought we were going to have another maybe 10 minutes of upside, but didn't have it. Reversed early. If we cross this line before 3 p.m. or before 2 p.m. probably, I can see a continuation of a drop. So it's not a good day. If we close at the bottom of today's candle, I can definitely see more drop going down. The worst news for the market is a new close and swing lows. A new swing low is going to be challenging. A new close low may also be challenging. But keep in mind, a new swing low and a new closing low on a daily scale is very bearish for the market. Gold, to me, is the opposite. I don't know if gold is dropping right now with this. Nope. That's the weekly chart. Sorry, you have to look at the daily chart. To me, gold is in the opposite direction. Gold, unlike stocks, which, well, stocks are not even close to making new swing lows, but gold has just made a new swing high and has made a new swing high close. So I am bullish gold. If the stocks make a new swing low and a new swing close, I'm bearish stocks. Now, if we only get one of the two, I'm bearish-ish stocks. All right, we got one last question. I like talking about the gold standard. Tyler Jenks said that gold standard and Bitcoin will fight it out at a stage. When is that stage, or is that not to your belief? It's not to my belief. Like I said, I don't believe the gold standard is coming back. I believe that some kind of a basket, a global basket, that global basket may have gold in it. So I can envision a global basket, the IMF standard drawing rights, the SDRs, being a backed basket. And in that basket, if I was to make that basket, I would put gold, I would put Bitcoin. Now, I bet you they will not put Bitcoin, but they will probably put gold. It would be dumb of them to put silver because that doesn't diversify gold at all. So I would put gold. I would put other countries' fiats, US, UK, maybe the euro. I'm hoping the euro breaks up by then, so we don't have the euro debate. So in which case it would be US, the Deutschmark from Germany. I know the French are going to want to get in there, give them like 1% or something. The UK, China will probably be in. Trump's going to have to give way on that, but this could come after Trump. China would probably be in. And that might be it. I don't think anyone will trust Russia. I don't think Russia will get in, and they'll be very upset about that, but it is what it is. So UK, Germany, tiny piece of the French, US mostly, and some China. There will also be gold in this basket. But here's the kicker. If I was to make that basket, I would also add equities. I would add equities into that basket, because the health of a financial system is the economy. And I know people disagree that that the stock market is a reflection of the economy. Now, not all stocks, a small part, equity in big global companies. Now, this is controversial, of course, but I like the fact that Amazon and Google and maybe one day Tesla and Microsoft, these companies are backing the money that I'm using. I like that. I like the fact that my money is backed by Microsoft's profits. I like that. It gives me more confidence that the money is not going to be debased, because you can't debase the value of a company. So that's my view on it. Now, ideally, you can just use Bitcoin. Not yet. Needs to scale more. Needs to have more value. Needs to be harder to move the price of Bitcoin. Now, these companies obviously will have to be big, and they can be replaced, like the Dow Jones top 30, the Dow Jones 30 stocks. If a company is doing poorly and a new company is doing well, knocks one out, right? So every 3 to 5 years, you reevaluate. And of course, these companies that are potentially backing in a small way the world reserve currency, these companies will probably have to go under more regulation and transparency than they otherwise would right now. It would have to be more of a global transparency, that they're not cooking their books, that you don't have an Enron or a WorldCom situation. Now, this needs to be done in a way not to compromise privacy, not to compromise intellectual property of those companies. But yes, there may need to be more regulation on transparency of these companies if they want to have the status of being involved in backing the currency. And if another company does better than that company, then you can replace that company. If Tesla becomes more important to the world than ExxonMobil because no one is using oil anymore, then Tesla goes in, ExxonMobil goes out, and some new energy company that has found the secret to renewable energy can go in. All right, guys, just some thought-provoking comments, and all right, enjoy. I'm gonna call it here. Like I mentioned earlier, just put these up on sale. Can't make them any cheaper. I'm spending multiple hours a day making all new presentations because I need better, more professional, more clear on-demand videos for people that want to learn before they get into the high-stakes world of trading. All right, thank you so much for watching. You can also support with the affiliate page, and I will see you all on the next one, guys. Bye-bye. Thank you, not me, and thank you, Jose, for your generous super chats. Bye, guys.